Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Monday the 9th of November. Starting with that is oil and gas, where there's been a second wave to the rally from the end of last week. Bit of a pause on Friday, but above Friday's high at 0.024. We should be looking towards the 200-day moving average at 0.039. Best case scenario target by the end of next month, perhaps up to 0.065. Stop loss, I suppose, basically above the September peak, 0.018. And ideally, there's no end-of-day close back below Friday's high if we really are on a tear for the particular stock in question. On to Chariot, which has rather defied the idea that oil and gas stocks are not the flavour of the month. Here we've had the shares first breaking the 8 pence target, which was opened up once we broke 4 pence, then up to 11.5, let's say, which is that resistance line there from the end of May. And now, while we're above 11.5, looking for as high as 16, which is that August resistance line projection, hopefully sometime during November. Next stock is one that I've been asked about 5 times to look at, which I keep forgetting to do so, but here it is finally. Conroy Gold and Natural Resources. The reason for the delay, I suppose, partly was the way that we were basically in a range between, let's say, 27 and 37 pence, but just breaking that now and heading towards the top of the rising trend channel from basically back at the beginning of the year, back in February at 47 pence. If we manage to get through 47 pence, I suppose we could open up the prospect of a steeper higher target rather, which is the July to August resistance line projection at 65 pence. So potentially plenty to look forward to there, especially while the shares remain above that late October peak at 35 pence. So above 35 up to 47 and then possibly up to 65 over the next couple of months for Conroy. Another stock which has been doing rather well has been European metals. Here we've got one of those situations where the initial target there broken. That was from an August resistance line around 36 pence. While we're above 36, we could hit that line of resistance from April last year, currently pointing around the 55 pence level. Although I have to say at the moment it looks as though we're going to have a bit of consolidation first. But at least while we're above the mid-30s, possibility of a new leg to the upside. Escape Hunt covering again, not necessarily because it's moved that much, but because it looks as though there could be a higher target for the shares. Initial target here was up to 14 pence, which looks as though something of a done deal early over this week or so. But next target up to that January resistance line projection at 25 pence. So a break of 14 could deliver up to 25 pence on a 1 to 2 month time frame. At this stage, only really back below that old October peak at 11 pence, really delaying the upside scenario. I suppose you could allow down to the bottom of the gap, the November gap at 10, just to give it a bit more room. But ideally, we stay above the 11 pence level ahead of 14 and 25. Onto a rather more obscure situation. Here's one that hopefully will start to move over the next few days. Gap through the 50-day moving average for Invinity Energy, and that is normally significant, especially as it was a bear trap down at 100 pence. The view is that while we're above the 50-day line at £1.12, looking for a retest of post-June resistance at £1.50 for Invinity, hopefully by the end of the year. On to Blue Jay Mining, which has been a slow market, let's say, over the recent past, but still in a rising trend channel from March, and while we're above the initial November peak at 9.5 pence on an end-of-day close basis, looking to 13 or perhaps 14 pence at the top of the March trend channel. Interesting technicals at the moment at Powerhouse Energy. The reason for saying that is that we've had an extended move here on the 200-day moving average of 2.4 pence. While we're above that, looking for a new leg to the upside, probably September resistance around 3.5 pence. If you're cautious on the stock, maybe wait for an end-of-day close through the 50-day moving average at 2.9 pence, but only back below 2.4, really delaying the upside scenario. Probably the most obscure stock of the day today is the next one, if it comes through. Proactis Holdings, nice breakout here after the extended consolidation that we've had since the end of August. Looking really, I suppose, at the way that the shares broke the 200-day moving average at 33 pence and could now head higher within a rising trend channel, probably up towards the 60 or 65 pence area, which is the top of a rising trend channel from the December last year, and the time frame on that hopefully by the end of December this year. Just a few stocks to go now, ones which I've covered quite recently. The first one is tissue Regenexx, which looks like it's having another go at breaking through the breaking towards, I suppose, the 0.45 area. Rising trend channel here from May, and an end of day close through the late October resistance at 0.45 should be enough to open up the shares to a top of May trend channel target size 0.75, hopefully by the end of the year. Obviously, initial target there, the 200-day moving average at 0.55. Wishbone Gold has been one of the stocks of last month, and looks like the way it's going, it could be one of the stocks of this month. Previously, I said that while we're above 12 pence, we could head up to 18 pence, and that's still the case. 12 pence, the initial November resistance, and while we're above that on an end of day close basis, 18 pence at that August resistance line projection looks as though it could be on its way, hopefully by the end of this month. Another stock which is just limbering up as well on the bullish side is XL Media. This is a great looking bull flag here with the floor of the flag at 30 pence on, 3 or 4 occasions now, 3 or 4 consecutive occasions. 30 pence was resistance on the way down, so that's become new support. While we're above that, looking for an initial target here at 42 pence, which is that February resistance line projection. Best case scenario target over the next, say, 2 to 3 months, 60 pence. But it is a very strong looking pattern here with the green bull flag that we have over the last few sessions. So let's see how that goes. And the obvious stop loss there just below the 30 pence level. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.